Good day, folks. How you doing? How you enjoying your trading? Um, Welcome to another lecture, and hope you'll find this video insightful. Because today I'll be touching directional bias, and I'll be sharing insights on how the market moves and why it moves the way it does. So stick around and hope you find this video insightful. Okay, now let's get straight into the video. Okay, before I get into this video, I want you all to know that if you are looking for direction, the most important thing to note is your previous XL or previous XH. X meaning X could be a variable of like day or weeks or months or 30 minutes or 90 minutes and so on and so forth. And I want you to have a note, as I'll be explaining to you why these levels are of great importance to you in your trading. And with that said, let me put my annotations on my charts. As you can see, I'm on the gold chart, ZAU USD, and I'll be breaking to you this whole yearly delivery and how I would have traded, and I'll show you my thought process as to how you'll be able to get direction on any market. Now I want to put my drawings on the chart. Okay, as you can see, I've annotated specific levels on my chart, and the first which I did was the February high. And again, you've seen that these vertical lines are of great importance to me during my analysis, because it demarcates every month from each other, their opening price and their closing price. So I use this to the horizontal line. It's very crucial. Okay, so as I was saying, this is February's high. Maybe I'm in the month of March, because look at March now, and March was bullish. What do we see? We displaced through this month's high, February high, which is this black line I've annotated. We displaced through it, and what made the displacement significant was that we created a fair value gap, which I've annotated in green. We created a fair value gap above the February's high. When we saw this, once I see this displacement, what am I thinking to myself? I'm thinking to myself that since the February high is broken, price will keep running higher. Yes, price will continue to run and create higher highs until we hit a certain price level. As you can see on the chart, we had price ran up throughout the month of March till exactly at April's open, which is this vertical line. April opens up, and we saw rejection. What were we rejecting? We're rejecting April's open. And what else were we rejecting? We're rejecting the previous month's high, which is March. In April, you can see the month of April, we opened up, we saw this rejection block form, and where will my eye be drawn to as a student of price action? My eye will be immediately drawn to this imbalance Why? Because the imbalance formed through February high, and this level also is very crucial. And once price formed this rejection block and dropped lower into the February high as this fair value gap, the reaction to this will be very crucial in determining order flow. Because if I saw displacement through this February high and we see price go to the downside, okay, let me use these tools. Okay, if price had traded below, I would have been expecting either we return above it, or we find rejection here and we see price trade to the downside. See price displace above this March high, the fair value gap, then saw displacement to the upside, then price formed a rejection block. At this point we saw price grind lower, then we open up for the month of May. I'll see that price rejects from the open. I'll see bullish continuation to the upside. We stop exactly at the rejection block, form the high. We saw price drop lower into March high. And what did we do when we got to March high? Saw rejection of March high followed by displacement to the upside. And note, these green arrows show or signify bullish signatures, while this red arrow signifying a bearish signature. And we saw March high rejected. My eye will be immediately drawn to the buy side liquidity resting above this high and this high. This high being April's high and this one being May's high. When before that, a fair value gap gets created, and how was it created? It formed through this yellow line which I have put on my chart, which is the open of May's open. Fair value gap formed through May's open. And what do we see when price returned into the fair value gap? Saw rejection from this red range. Saw rejection, then price rallied to the upside. Then we took out May's high. If we had created this scenario from the green arrow, I would have been looking for price to continue to the upside. But what did we see? We saw that the next candle did not trade above May's high, rather formed a bearish candle. Then my eye will be immediately drawn to where this fair value gap, the range of this fair value gap that formed through May's opening price, which I annotated in yellow. Then when price grinded to the downside, we immediately rejected the fair value gap. Then again, it's the same process over and over and over. Then my eye will be drawn to the buy side liquidity above market price. Then so price move to the upside, reject off a specific level, which is the -4 and the -4.5 standard deviation levels. Very crucial level. And what did you see? See price reject the level from this Fibonacci retracement tool. Then saw price retrace to the downside again. And where did we find support again? We found support once again in the fair value gap. This red range which I outlined has been very crucial, which IPDA interbank price delivery algorithm refers to referred to it in the month of June, July, and as well August. And we saw the price dip into the fair value gap. We created manipulation. From then on, my eye we immediately drawn to the buy side liquidity above market price. Then we saw price grind before we saw an aggressive push to end the month of August. Okay, let me take you now to the last 3 months. Okay, in the last 3 months of gold. Okay, starting from August, after this repricing to the upside, we saw again bullish signatures which I've pointed out to you guys from the beginning of the video. Bullish signature, which means that price will displace above a key high with a fair value gap, and we saw that, and immediately, we're trading at all-time highs. There's something which I used to gauge for expansion. As you can see, price retraced into the fair value gap from this bearish candle and immediately found support. So my eye will be immediately drawn to the upside, and we saw price gravitate towards this specific level, the 4 and -4.5 level of the standard deviation 2. Then again we saw price, we saw the close of the month, and we saw October open up, and we used September high perfectly as support on price. Let me zoom in a bit. We use September high. Let me highlight September high. High in blue. We used September high as support on price, rejected it, and we saw fair value gap form. Where did this green fair value gap form through? It formed through this high here, stated in black. It's a PWH, previous week's high. That's where this fair value gap formed. Knowing that we have already rejected from the previous month's high and we created a fair value gap to the upside, my eye will be immediately drawn again to the -4.5 level of the standard deviation 2. So price trade into that level, went above it, stopped there for some time, consolidated above it, and dropped. We dropped back into the range of this fair value gap that formed through this high. This high as well was another previous week's high. If you can look on the bottom, you'll see that was Wednesday, Thursday, Friday. So it was a high of this week. So price creates a fair value gap through, and it was very crucial. If you are trading gold now, you have to leave this range on your charts, because in the next weeks and months it will be crucial to the delivery of price. What we see, when price dropped into this range, we formed a low initially, then followed by displacement through. We displaced through it, and we saw price find support in this fair value gap, the range that got displaced through by a fair value gap, and we rejected exactly from this black line, which was the previous week's high. So now, moving forward on gold, what I'll be expecting is the following. I will be expecting. If we reject all this range, then we might likely come back to this range. But if we don't see rejection from this range and we see price trade through it, what we can expect is the following. We can expect a high to form around here because there's a fair value gap at this. We can expect a high to form here, rejection. If we create a fair value gap on coming up, we can expect retracement into this range, into the range. Then we can see a bullish move to the upside. You can see my eye will be immediately drawn to this point. Yes, on gold, my eye will be drawn to this point. But the scenario which I'll be expecting to see is that we get above this range, we turn into it, then that's the move I'll be expecting to see. So hope you find this video insightful. Hope you learned a lot from it. It's a rather short one and rather not organized, but I hope you find some value from it, and I hope and I pray that I'll be able to drop more lectures on price for you guys to watch. Thanks for watching and have a good weekend. Be safe. And note, this video is for educational purpose only. It's not financial advice. Do your own research, and bye for now.